today. Stocks finish lower, meme stocks rip higher, a look at tech stock valuations, inflation here to stay, how to protect yourself from inflation, and Trump stock Truth Social to begin trading tomorrow. And so it was a very tight range day to begin this shortened trading week. Markets shut on Friday for Easter holiday. S&P 500 put in a really narrow 13-point range today. And even though the main indices finished a bit lower, and we've got a little bit of a pullback happening today up the front in a bunch of sectors, that wasn't really the case in small hot stocks. Meme mania is well and alive. Out the front, we got Trump's SPAC digital world up 35% today. I'll get into that a bit later on. Also get a big bump up across the crypto space. MicroStrategy, CleanSpark, Coinbase, Riot, all coming up at the top of the advancing list today, along with a few others like Supermicro Computer, which are also showing up in the top option volume leaders today. And crazy to see stock like MicroStrategy doing more than double the call option volume of the S&P 500. And we've got newly listed stocks Reddit ripping up 30% today in regular hours and up another 12% post-market as I speak. Same deal with the latest AI stock onto the market. Astera Labs up 21% today, trading a little higher after hours as well. And this is on a day when most of the market is weak, except for a few names with the real standout sector, energy, oil and gas today, along with gold miners and utilities, the winning sectors today. And stick with me because I'm going to make a case for energy and commodity stocks and share with you a screen on how you can find good energy stocks, which I think are going to be a good place to hide out in the coming years due to a likely second wave higher in inflation that's probably already started. However, here and now the stock market is ripping. We're off to one of the strongest first quarters since World War II, and normally that means further gains to come. If the first quarter is positive, most of the time we end up going on to finish the year positive as well. In fact, whenever Q1 is up more than 8%, we normally finish the year up 22%. And so far, we're on track for the 12th strongest first quarter performance since the end of World War II. And that's already showing up in investor sentiment and positioning, with small speculators with their most bullish positioning ever on record. And it's kind of interesting because we all know these stats of seasonality now. It's very easy for computers to crunch, or previous historical data, something that going back in time wasn't so easy. So I'm wondering, since we all know these stats and historical patterns and seasonality, could it potentially change it? And that's why so many people are highly levered long in this market right now. Not only that, we're seeing stats of tech outperform the rest of the market by more than ever as well, with tech stocks versus S&P 500 approaching 2 standard deviations above the average and the highest absolute and relative valuations, looking at a combination of 10 different valuation measures since the late 90s tech boom. And on some other measures like price to sales, we're actually higher than the late 90s. Tech stocks now above 8 on a PS ratio. And so we not only have a little bit of a valuation bubble, could also be a profitability bubble. You can see that in analysts' estimates for NVIDIA's revenue going forward. Expected to come in $60 billion this year, and they're expecting that to more than double over the next 2 years, 2026, $130 billion. And so it's a bit of a debate in financial markets at the moment. Are tech stocks in a bubble? Are they not? If so, is it worse than the late 90s? Well, like I show you guys, on some measures, yes, other measures not. It all depends on profitability. If profits can hold up, growth can hold up, then rich valuations have a chance at holding up as well. But we've even got research like Goldman Sachs saying stocks could surge another 15% this year, with mega cap tech still nowhere near bubble peaks. And we've got others like Wedbush saying Alphabet is set to pop 15% as Google is a clear winner in AI, in which they've kind of been lagging behind in this space and struggling to catch up with some others. They did recently partner with Apple to integrate their chatbot Gemini into iPhones, which should be a good move for both companies. And technically speaking, Alphabet could be poised for a breakout here. It's been range bound for quite some time, and markets don't stay range bound forever. They do eventually break out. It is looking constructive on the weekly chart there. It's gapped up and held. And fundamentally speaking too, it's not looking too bad. It's actually only second to NVIDIA in terms of stock valuation compared to my stock fair value indicator, and quite reasonably priced given its dominance in the markets it operates. Search and video does deserve a premium, so I'd say Alphabet could very well break out above this 153 level in the coming days and weeks. And so even though in theory a really hot stock market, if not a bubble, and AI mania should make it hard for the Fed to cut interest rates, because they'll just pour more fuel on the fire, the reality is the Fed's still very likely to cut rates anyway. And that was reinforced today by Chicago Fed President Goolsbee, who said he expects 3 rate cuts this year. And so even though Treasury yields want to go higher, they're range bound because of the Fed's dovish stance, even though we're continuing to see weak Treasury auctions. That's a lack of bidders and dealers having to take up more inventory than usual, and already early signs of cracks in the market for US government bonds, which is not a good sign long term for the cost of US debt. And so it's very likely inflation is here to stay. Even if it doesn't rip back up above 5%, it could be years and years before we ever see CPI down at 2% or lower again. And that just continues to compound that embedded inflation. Things like groceries up 30% the last couple of years. Not to mention other things like climate change and extreme heat can drive inflation higher as well. We've had huge underinvestment in areas of energy and commodities, a continually growing global population, switching to clean energy, which could also spike the price of fossil fuels in that process as well. Not to mention the decrease in amount of agricultural land that could really bump up food inflation. On top of that, geopolitical tensions, the highest they've been in years with Russia and China and the Middle East helping to keep a bid in oil. And just looking at a long-term chart of inflation, it never just comes in one wave and then dies down. And we always get multiple waves higher, then it kind of goes low, waves higher, and then goes low. And so we've had this first wave higher for the first time in decades with strong structural reasons for that. Rock bottom interest rates, Fed liquidity, government stimulus, underinvestment in commodities, etc., etc. However, the Fed and the stock market thinks we're just going to go down here and stay like this in some dream scenario that's, I would say, almost impossible. And in an eerily similar pattern, CPI is kind of following what we saw in the 70s. So this chart is about 9 months old. There's CPI back in the 70s in the blue, and here we are currently in the orange here. And just updating this chart, we're about right here now. And just like back then in 76, a lot of people thought inflation was done. The Fed actually cut rates, just like they're about to now. And that actually laid the ground for a huge second wave higher that actually eclipsed the first peak. And so like Morgan Stanley says, one of the best hedges for that is to buy energy stocks as the Fed becomes less aggressive in fighting inflation. They've got more important things now, like the election and allowing the US government and corporate world to refinance a huge amount of debt. Then they'll deal with inflation again like they did in the late 70s. And in a similar geopolitical setup to the 70s as well, the Yom Kippur War, bunch of Arab countries attacking Israel, US coming to the defense. Looking back in histories, whenever we have a geopolitical event, gold, oil, and commodities significantly outperform stocks, even bonds as well. And the 70s was a lost decade for stocks, went sideways, a lot of big dips, kind of a kangaroo market that whole decade, whereas commodities significantly outperformed. We had gold and oil ripping, and we can see that in this spread chart of commodities versus stocks. Commodities hugely outperforming in the 70s, then they underperformed in the late 90s and the tech bubble. Then after the tech bubble burst, they went on to outperform again right up to 2008, and since then they've been massively underperforming. And so recently commodity prices reached a 50-year low relative to overall equity markets. In the past, when this ratio reached such levels, commodity super cycles began. And so recently we've been seeing a bit of a bid in the energy sector. Oil and gas and materials, not to mention gold, just recently breaking out to new all-time highs. And so if you're wondering what's a way to play that or add some diversification or at least a hedge into your overall portfolio, then if you use TradingView, you can set up a screen like this where you filter for stocks in the energy, minerals, and non-energy mineral sector. I'll look for a market cap above $500 million, stocks that are hitting new 52-week highs, and then you could spend hours poring over financial statements and balance sheets, or you could use some fundamental indicators like mine, stock fair value, shareholder yield, business quality score, quant factor scores, and then scroll through each stock, looking for stocks that show up a lot of green in the fundamental indicators, ones that could potentially have more room to run, and looking back in history, ones that score well fundamentally tend to outperform the market on average. And then you can use things like a trailing stop or a fair value price target, or whichever one comes first to get out. And we're seeing some of the best investors and wealthiest people in the world get into this sector. Warren Buffett's been loading into oil stocks. We even saw last week Dallas Cowboys owner Jerry Jones invest $100 million into a natural gas stock. Billionaire Paul Elliott getting into mining shares. And so some really big smart money has been getting into this space, and they're starting to trade up already. Even when we've still got tech stocks ripping to new all-time highs, we're already seeing a bit of a rotation into energy and commodity stocks, of which the sector is still the cheapest relative to every other sector out there. And when you combine that with momentum, then it becomes a very high probability trade. And a lot of these stocks come with good dividend yields as well. And so if you'd like to get my 25 custom indicators for TradingView, then I'm running an Easter special for the next couple of days only. Head on over to my website, clickcapital.io, click on the big red banner, and you'll come to this page here, where you have the choice of getting lifetime access to my 25 custom indicators, total value over $1,200. You can get them all today for the one-time fee of $239, or you have the second option of getting my online course and 25 custom indicators for the one-time fee of $339. And they both come with a 7-day money-back guarantee in case you change your mind. So if you're interested in learning more about that, click the link below this video and take advantage of this special offer today. Just moving on to the other big bit of news we got in financial markets today. That's the frontrunner for the next US presidential election, Donald Trump, scoring 2 big financial victories with an appeal on his bond ruling, looking to potentially reduce his legal bill from almost $500 million down to $175 million, and the approval from his shareholders to take his SPAC Digital World acquisition, which owns his Trump media business that runs his social network, Truth Social Public, which is actually set to start trading tomorrow on the NASDAQ under the ticker DJT, his initials. And so the company will be called Trump Media and Technology Group, and that had a huge day on the market, soaring up on both those good news of his legal bill looking to be reduced and approval for his company to start trading on the market. And we can see that here today, up 35% in the regular session on big volume, 21 million shares, trading up after hours as I speak. And even though the company isn't profitable yet, a lot of small investors are buying it in support of him. And in this market, a lot of unprofitable companies are trading at rich valuations. We've seen that in Reddit today and many others, trading on huge price to sales, even though they've been unprofitable for years and years. Insiders cashing out big time. Market doesn't really care. And especially with how many loyal supporters Trump's got, the more that buy, the richer a valuation it will trade, and that helps support him and his quest to return to office. However, what should come as no surprise is to see mainstream media do their best to criticize the new company and try and create a lot of fear, uncertainty, and doubt in investors' minds. That's why we're seeing articles like Trump's new media company has risks, 5 reasons you shouldn't invest. Trump's Truth Social is losing money and has scant sales. Truth Social won't be profitable for the foreseeable future as investors eye a risky SPAC merger. And Trump fans buying into his new company are in for a disappointing time. So on and so forth. So it's going to be an interesting, entertaining saga for us all to watch this come onto the market tomorrow and how it plays out and into the US presidential election, as it could very well help him get out of his legal troubles. And if anything, could actually play into his favor if he is able to overcome his legal issues, as it'll appear the other side were unsuccessful in trying to take him out of the race. Nonetheless, we'll keep an eye on it and see how it opens up tomorrow. Clearly got some momentum here. As I speak, after hours, up another 7.6%. Let's move on to economic data we got today. Not much out. New home sales coming in a bit weaker than expected. Tomorrow we'll get durable goods orders. Thursday we'll get GDP data, consumer sentiment, and Friday, even though the market is shut for Good Friday Easter holiday, we'll still get a really important read on inflation and personal consumption expenditures index, and we'll also get to hear from Fed Chair Jay Powell himself in his speech. Interesting to see what he has to say on the same day we get some PCE data. Market's still saying 70% chance the Fed's going to cut in June, and that's why we've still got the greed index at 68. Corporate insiders doing a little less trading here as well on both sides. Diving back into the charts, there's the S&P 500 just having a slight little pullback here on really low volatility. Got a little bump up in the VIX today. There's the 2-year holding around 460, 10-year just above 420, and high yield bonds just pulling back from that resistance zone a little bit. There's the dollar index holding above the 50-day VWAP, and there we are in Bitcoin, putting in a green candle, holding the line on this uptrend, back above $70,000 a coin. And there's crude holding pretty strong as well, around 82 a barrel. Another rip higher in the agricultural Commodities fund. Cocoa on absolute fire. It's turned into a meme stock. Up a huge 54% above its 50-day VWAP. That's a record. There's a look at Apple, falling a little bit today, trying to hold $170 a share. And NVDA, well on its way to hit $1,000 for the first time ever. Tesla just trying to hold in there. And the meme crowd back in action. We've got the most famous meme stock of them all that kicked it off a few years back. GameStop up 15% today. Even got the penny stock Nikola up 12% today. And Reddit still trading up after hours as I speak, and this thing's designed to be pumped. Look at that float, under 14 million shares. Makes it really easy to be pumped up, so I wouldn't be surprised if this hits $100 a share. But like I said, good luck to investors in that one. It's a classic cash out from insiders on an unprofitable company. And the madness continues in MicroStrategy as well. Looks like it's on its way to hit $2,000 a share. It too is designed to be pumped higher and squeezed higher. 15 million share float, but this really relies on Bitcoin staying up there. And the other old economy hot stocks at the moment, kind of looking a little soft here, not ripping up like their meme counterparts. Actually a big drop in Abercrombie and Fitch today, down 10%, and the banks having a little bit of a pullback, but still holding ground in their uptrends. Okay, so apart from meme stocks, pretty non-eventful day to start this shortened trading week, and it's probably likely to stay like that all week as we go into Friday PCE Jay Powell speech, in which the market will be shut, but there was some positive price action, like I said, in energy, oil and gas today. actually one of the leading sectors and appearing to stay well bid, walking the line here. And whenever you see that short-term price action, that bodes well for the medium term as well. You can see momentum coming back into the sector on my trend strength indicator. Thanks very much for tuning in, and I'll see you again tomorrow night. Cheers.